Hello friends, myself Savita Patil, Assistant Professor, Government Degree College, Kamalapur. Welcome to the today's session. My today's class, we shall see the important head that is the income from other sources under the income tax. All of you know, there are five most important heads are there under the income tax. Income from salary, income from house property, profits and income from business, income from business and profession, capital gains and other sources. From these five heads, the fifth is the most important head, that is the income from other sources. Income from, let us see the brief introduction of the income from other sources. Income from other sources is one of the heads of income chargeable to tax under the Income Tax Act 1961. And the income that is not covered in the other four heads of income is taxable under income from other sources. Means what here? Any income which is not covered from those four heads, then it is liable to tax the fifth most important head, that is the income from other sources. Because of this, it is known as residuary head of income. All the incomes excluded from salary, capital gains, house property or business and profession are included in a income from other sources, except those which are exempt under the Income Tax Act. Here, just in the introduction part, we can understand that income from other sources is one of the most fifth important head under the income tax. The incomes which are not chargeable to tax for the four heads, then the remaining incomes are liable to tax under the head, that is the income from other sources, and that's why it is also known as the residuary head of income. And the incomes which will not included in this head means which are exempted from the tax. Those incomes will not include under the head income from other sources. This is what the brief introduction of income from other sources. Then, now let us see the section 56 income taxable only, that is under the income from other sources. Let us see dividend income. It's income earned from winning lotteries, crossword puzzles, races, gambling or betting of any kind. These are the important incomes which are liable to tax under the head income from other sources. Next will be the money or movable, immovable property received without consideration in adequate consideration during the previous year. Interest on compensation or enhanced compensation received. Advance money received. Incomes taxable under the income from other sources only if not taxable under profit and gains of business or profession. Students, here we have to understand that the incomes not taxable under the head income from other sources only if not taxable under the profit and gains of business or profession. Means what? The meaning of this means the incomes not, if they are not chargeable to tax under their income from business and profession, those incomes are liable to tax under their income from other sources. If already they are charged under that head means we can't again include in this head. Okay, then income taxable. Now let us understand the next incomes, that is any any sum contributed towards provident funds, ESI, etc. by employee to the employer only if not deposited in the relevant fund. Then the interest earned on securities. Income received from the letting of a plant, machinery or furniture with or without building. Incomes taxable under the income from other sources only if not taxable under the income from business and profession, that is salaries, human insurance policy. Okay, then under section 57, what are the expenditures allowed as deductions? Let us see. Expenses incurred for realization of dividend. Deduction to the extent amount remitted within the due date are authorized. Family pension, very important. We have to understand that is the 1/3 of the family pension or the maximum 15,000. In these two, whichever is less, we will consider as a deduction under the family pension. Okay. Deduction for current repairs, insurance and depreciation will be allowed for income earned by way of lease rental. A deduction equal to 50% will be allowed for interest received on compensation or enhanced compensation. This was is a section 57. Then Now let us see what are the section 58, that is the sum not allowed as deductions while computing taxable income. That's personal expenditure, interest or salary payable outside India without TDS deduction, while the tax expenditure concerning winnings from lotteries, cross purposes, races and gambling, etc., and expenses specified in section 48. This what consists of the section 58. Now, my dear students, as in the BCom final year, according to that's for which is more useful to you people means, let us see what are the most of the incomes which may be included in our problems. Okay, let us see. Now, till now, what we have understood, what are the various incomes according to the various sections. Now, what I'm giving you the gist, the what are the important incomes that may be included in the problems generally. Okay, that is other sources of income are stated below. That is lottery, gambling, betting, horse race, crossword puzzle, any other casual income, interest on other than interest on securities, commission if it is not part of one's main business or profession, family pension, royalty, director's fees, subletting of house, dividend, tuition income, and the examiners remunerations. These are the important incomes which may include in our problems generally. Okay. Now, now this is very important aspect, that is the calculation of the interest on securities. That is how the interest on securities will be calculated. Very very important from the calculation viewpoint. Let us understand here. The interest on securities will be classified into mainly two kinds. So that is the less tax securities and the tax free securities. The less tax security will be classified into government and the government here. First one is the and the commercial. Under the government need not to gross up. Whereas under the commercial, if the percentage given, then no need to gross up. Whereas if amount is given, listed or unlisted, then amount received into 100 by 90. My dear students, you have to remember this. This is very, very important. Here in the income from other sources, we have to understand where we have to make the gross up and where we should not do it. This is what the very, very important formula. And then the next will be the tax-free securities again classified into government. They are exempted from the tax, whereas commercial tax, that is whether the percentage given or amount is given, always we have to gross up the listed and unlisted. How we have to gross up, that is the actual amount received into 100 by 90. This is what the very very important. Once again, I will explain you. The interest on securities are classified into less tax securities and the tax free securities. From the government need not to gross up, whereas the commercial, if the percentage given, no need to gross up. Whereas if the amount is given listed or unlisted, the amount received into 100 by 90, we have to calculate like this. And the tax-free securities again classified into two, government and the commercial, whereas the government is exempted from the tax. Whereas under the commercial, if the percentage is given, amount is given already gross up, then the listed or unlisted we have to calculate amount received into 100 by. Okay. Then let us understand what are the important deductions. There are various deductions already we have discussed. Let us see some very much important deductions which we can come across in the various problems. Okay, that is the casual income. TDS is applicable at 30% on this. It's generally received after deduction of tax. Hence, it's always gross up while calculating the amount under this head as given below. Gross income is equal to net amount received into 100 by 70. Very, very important. That is a casual income. Then the lottery income. If the lottery income is less than 5,000, then there will be no TDS. Hence, no need not to gross up. Income from horse race. If the income from horse race is less than 2,500, then there will be no TDS, no need not to gross up. Then the family pension, already we have discussed, that is the 15,000 on or with one third, whichever is less, we have to consider. Then the taxable is equal to, how we have to calculate the taxable, actual amount received minus the exempted. Dividend from Indian company is fully exempted, remember it. Whereas dividend received from foreign company and the cooperative society is compulsory liable to tax. This is what the very very important the you have to remaining. Okay. Now, let us see what are the important tax-free incomes. There are various tax-free incomes. Now, let us see which are very much important the way from our problems viewpoint. Okay, the tax-free incomes in case of other sources: interest from capital investment fund, interest from USP, interest from national relief fund, income from UTI, any allowance to MP, member of parliament. These are the few important, that is tax-free incomes which we can see in our problems. Okay. Yes, students, till now we have discussed the theoretical of aspects of the income from other sources. We have seen the introduction and what are the various incomes we have to consider under the income from other sources, and what are the various deductions, and how the interest on securities will be cross step when we have to consider which rate. Everything we have understood in my today's theoretical class, that is income from other sources. If you have liked my that's today's lecture, you have to subscribe my channel. Uh, in my next video, we shall see the important problems, how they will be solved under the income from other sources. Thank you.